Good evening, guys. It's Saturday, August 13th. My name is Dave Coker, and this is Talking About Finance. Bunch of new subscribers. If you're new, this is driven from a Telegram channel that about me and about 50 friends all participate in. Bunch of ex-bankers, current bankers, and all we do is talk about finance 24/7, and I bring the best to you guys. So we're going to start, as always, by looking at the markets, and my gosh, hot days in London, hot days in the markets. We've just had dinner and ice cream, and the night is young. So we're going to look at the S&P 500 last week, and then we're heading out for the night. I hope you're having a good evening as well. But wow, holy cow. It looks like the markets are coming around to our view. We believe that things aren't as bad as a lot of the press would leave us to believe. Sure, there are issues, but where some see problems, we see opportunities. It's all about adapting, guys, being flexible, rolling with the punches, investing heavily, no matter what price action we're seeing. Remember, guys, we buy and hold, and hold, and hold forever and ever and ever, fully invested until we die. It's the only way to be sure. The S&P 500 was up 3.3% on the week. It's now down only 10.2% year to date. This is very positive. And keep in mind, being a stock market, a student of the markets, tend to know a lot of arcane stuff about the markets. U.S. midterm elections are coming up. They're running in November. And historically, looking back to 1962, the markets, the majority of the time, they tend to perform well after midterm elections. 6 months returns average about 15%, 12-month returns average about 16%. You got to be in it. Don't try to time the market. Let's go. The VIX traded down slightly this week from 21.15 to 19.53. Also good. The 10-year note is flat on the week at 2.85%. It's up 1.3% year to date. Oil closed at 91.90. Up about 3.2% week on week, and up about 22.2% year to date. Mr. Biden, of course, is flushing the Strategic Petroleum Reserve. It's about to run out in October. So we'll see how this goes. We took a lot of static, my friends. They called us names. They called us idiots, fools, stupid, they said. And my favorite, psychopaths. Hey, look at a picture of me. I'm a psychopath. We're all psychopaths. We keep the faith. No matter what the markets are doing, we're buying. Week in, week out, we buy stocks. We buy bonds. We buy gold. We buy Bitcoin. We buy Ripple. That's on my menu. And whatever you got on your menu, one little point. Just don't sit there. Buy something. Cash is nothing but trash in this macro. And already the dividends are trickling in this month. At the end of the month, I'll have a pile of cash. I will buy stocks. I will buy gold. And every week, I buy both Bitcoin and Ripple. Bitcoin I've been doing every Friday for years. Ripple's a little new, but I've got a lot of interest in Ripple. And what else can I say? But money is flat and meant to be piled high. So don't spend it. Invest it. Sometimes we have to look at the fixed income market to figure out what's going to happen to stocks. Why? Bonds, they tell us things. All you have to do is listen, guys. Open your eyes. What I've got here is I've got high yield debt minus investment grade debt. So essentially I'm looking at the spread. And you can see there's three different areas of interest. In December 2018, we saw the spread widen out to 3.81. Of course, we had a fairly robust response to the markets response of the markets in December of 2018. April 2020, we saw the spread widen to 6.35%. And in July 2022, the spread widened to 4.32%, but it's falling. That's bullish for stocks. Really fascinating. And after the correction, many people are talking about stocks being cheap. Well, you have to be extremely careful what you're buying. I can't remember who put this up on Telegram. Doesn't really matter. From Kalish Capital. Really interesting chart. What they're doing is they're looking at the total market cap of stocks with a price to sales ratio greater than 10. And you can see what happened way back in 2000. .com bubble, yeah? Oh, yeah. Very good. What about now? Well, you can see it got really out of control. It tracked up to 14 at one point, then it dropped down to 5, with the Corona crash, and now it's trading up to about 8. So it's up to you guys to take your pick. I don't really buy stuff like that because I only tend to buy stocks that pay dividends, and they tend to be much more rationally priced on the whole. The economy overall, though, when we look at the bond market, when we look at the stocks, we can look at certain indicators. And here I've got CPI. I got a metric called owner's equivalent rent. And my banking clients, my God, they're really driving me crazy in the sense that they're very concerned with inflation. That's all they're asking me to research and write about. So I pushed this note out yesterday and did an update on Medium, actually, if you want to read that, a little brief thing on Medium. And what we're doing is we're looking at owner's equivalent rent, essentially housing inflation. And what we're doing is we're looking at it for two distinct periods. We can look back in the 1980s, and we can see from 1982 it was, up to 1986, we saw an increase over some 39 months of owner's equivalent rent. Now we've seen it accelerating for 15 months. And the message here, guys, is that we're not out of the woods yet with inflation. It could go much, much higher when we start to see things like this driving it up. Other things that are driving up the prices, inflation, just the price of living, is the cost of food. And here I've got a consumer price index for all urban consumers. Like I said, lots of interest in inflation. I pushed this out earlier this week, and we're looking at food inflation. Of course, we got the CPI print this week. Food and energy came in hot. I broke them both down in some research that I did. And here's the key takeaway for food inflation. We saw during the aftermath of World War II and the Korean War, we saw 6 years of high food inflation. What we're doing is we're looking at percentage change year on year. You can see it was pretty robust back then. During the Vietnam War, we had 5 years of high inflation. Again, much higher than it was during the Korean War and World War II saga, but still, it lasted for 5 years, the high inflation. The Ukrainian War, so far we've had 3 months of high inflation. Can it continue? Oh, yes, it can. So just be prepared for that. Here's an interesting one, guys. Japan's getting hammered with COVID. And some people were blaming tourists, and actually a Japanese woman put this on the channel, the Telegram channel. It was really eye-opening, because I immediately thought, yeah, tourists coming from abroad with COVID. No. Look at this. Nobody was entering that country during pandemic. Really fascinating. Think about what the effect will be on the economy overall. It's really interesting to look at this stuff in general. Here's a good one. And, my buddies always give me a hard time because they know I've invested in the metaverse, in Decentraland. I own property. And, guys, virtual reality, virtual land, virtual profits, virtual losses. I don't care. Why? Well, yes, I've got the virtual land. Yes, in terms of capital, I'm down a little bit. I'm down about 12%, I believe. I'd have to look again. Here's the point. I got virtual tenants and they pay me rent. And don't think the rent is virtual. Of course, it is on some level. I'm getting these coins, but I can convert them to currency if I wish, to fiat if I'd like, or, as I tend to prefer, I try to get it out of Ethereum as quickly as possible and into Bitcoin. I just like to do that. It's really interesting. I do sell NFTs, and here's an interesting one. Again, my buddy's giving me a hard time about NFTs cratering. And some guy, it was on Twitter, I can't remember who it was, I'm so sorry, went through and indexed 100 NFTs from all-time high to losses. And you can see some of these things are down. My God, the smallest one on this list was like 78%. Here you can see it's 80%. It's the Littles NFT. My God, these are taking a bath. I sold NFTs. I didn't buy any. So I don't really care. And the thing that's really cool about NFTs, guys, I've been making art for years and selling it here and there if I could. The thing that's really cool about NFTs is that you actually get, and my art sucks, by the way, but you actually get money if there's a resale. I got 2 last week, 2 resells. Not much money, about 0.6 of an Ethereum were one, and the other one was what? I think it was like 0.35 of an Ethereum. I don't really pay attention to that because Ethereum, I don't like to hold it. I just want to get the money out of Ethereum, put it into Bitcoin, and not really have to worry about this stuff. But very, very fascinating. Oh yeah, and speaking of Bitcoin, somebody updated the wealth pyramid. This was from Invest. I can't read the rest. I'm not sure who did it or who put it in the Telegram channel. Not really of notice. Look about it this way, guys. If you've got less than 0.135 Bitcoin, you're in the 95%. You're in the masses, the unwashed masses. People we call no-coiners. If you've got more than 3.6, you're in the top 1% of Bitcoin holders. If you've got more than 21 Bitcoins, you're in the top 1/10 of 1%. Why is this important? Well, we've mined roughly out of the 21 million Bitcoin that we could mine, we've mined all but roughly 1.88 million. So if you ain't got no Bitcoin, you want to get some Bitcoin because the amount of Bitcoin left to be mined is shrinking and rapidly. And that came up a couple weeks ago. I put it on FinTech Flash News. I have to admit, I was sort of surprised when I saw it. I said, oh yeah, it makes sense, but didn't really think about it that way. And somebody this is actually Plan B. He's always looking at Bitcoin different ways. And he applied the RSI, the Relative Strength Index, to Bitcoin. Now, if you're not familiar with this, the RSI, I won't go into the calculation, but it's what we call an oscillator. And it goes from 0 to 100. And the fundamental idea is as it oscillates between 0 and 100, if it's trading above 70, the asset in question, which is Bitcoin in this case, is overbought. You should sell it. If it's trading less than 30, the asset in this case, Bitcoin, is oversold and you should buy it. Now, I gave you the parameterization for stocks, a little bit different with Bitcoin. It's roughly 45 on the downside and 95 on the upside. If you look at these times when it peaked out, we tended to see Bitcoin behave accordingly. It either dropped in price or it went up in price each time. And there is a chance we're moving into another bull market of Bitcoin. I don't worry about that. I just buy every Friday. And when I buy, I know Bitcoin either went up in value or went down in value because I get less Bitcoin for the same amount of money I've been using to buy Bitcoin every week. And of course, when you go back to 2014, I bought a lot of Bitcoin. Now it doesn't buy that much, but I don't care. It's just throw it on the pile, or as we say, stack sats. Okay, guys, my name's Dave Coker. Thank you so much for attending this evening, for participating. Got some really interesting questions through PMs, and if you got any questions, let me know. Aside from that, invest heavily. It's going to be a great week. I just got good feeling about this. Take care, guys.